Here are 4 pieces of news from the crypto industry. In July, spot Bitcoin ETFs attracted over $2 billion. JPMorgan experts called the recovery of the crypto market a temporary phenomenon. U.S. Bitcoin-based crypto funds control over 900,000 BTC. Renowned analyst urges to get rid of Cardano, Ripple, and Worldcoin. First, news. In July, spot Bitcoin ETFs attracted over $2 billion. Since the beginning of the month, American spot Bitcoin ETFs have attracted $2 billion. This growth confirms Bitcoin's status as a leader among digital assets, attracting attention from both institutional and retail investors. American Bitcoin ETFs hold more than 900,000 BTC. According to Farsight Investors, American spot Bitcoin ETFs have attracted over $2 billion since the beginning of July. Over the past week, the total net inflow into 11 funds amounted to more than $1 billion. This week, ETF inflows exceeded $300 million 3 times, and on July 16, a record single-day inflow of $422.5 million was recorded, the highest figure in the past 6 weeks. Furthermore, over 6 months, the net inflow reached $17 billion, surpassing Bloomberg's forecast of $15 billion for 12 months. Shubh Varma, co-founder and CEO of Highblock Capital, emphasized the significance of these figures, noting that they indicate high market demand and renewed investor interest. Interestingly, most of these inflows occurred over the past 30 days, indicating a recent surge in investor interest. This suggests growing confidence in the instrument, which could boost prices and market capitalization, contributing to overall market growth, Varma stated. As a result of such significant inflows, the total amount of BTC held by U.S. registered ETFs reached a record level of more than 900,000 BTC. Nate Geraci, president of ETF Store, reported that funds account for 4.3% of the total BTC supply. The leader in terms of Bitcoin holdings is expectedly IBIT from BlackRock. The fund holds 327,182 BTC worth $21.79 billion. Next is Grayscale's GBTC with 272,193 BTC valued at $18.1 billion. Fidelity's FBTC ranks third with over 180,000 BTC worth $12 billion. Second, news. JPMorgan experts called the recovery of the crypto market a temporary phenomenon. Analysts at JPMorgan Chase argue that the recent rise in the price of Bitcoin and several other crypto assets is not indicative of a bullish trend. In their opinion, it is a short-term recovery, and the industry may face a correction in the near future, writes the block. Experts believe that Bitcoin's price of over $67,000 is an inflated figure for the current market realities. They note that the cost of mining the asset is around $43,000. As of the writing of this article, Bitcoin's price is holding at $66,814, with a 12.9% increase over the past week, according to TradingView. JPMorgan representatives also considered the difference between the first cryptocurrency and the adjusted volatility comparison with gold. They believe that these figures indicate a limitation of Bitcoin's long-term growth potential. In March 2023, JPMorgan Chase stated that the first cryptocurrency would not be able to match gold in nominal volume within investment portfolios. The company suggested a possible return of the crypto market to an upward trend in August 2024. By then, the impact of payouts from the Mt. Gox exchange and the German government's sales of the first cryptocurrency will have fully dissipated, pushing the industry towards further growth, according to JPMorgan. Additionally, experts paid attention to the situation surrounding U.S. presidential candidate Donald Trump. In their opinion, Bitcoin and gold will benefit from the potential victory of the politician in the upcoming elections. They noted that investors expect a softening of the U.S. government's rhetoric towards the crypto industry with a change in the head of state. Third, news. U.S. Bitcoin-based crypto funds control over 900,000 BTC. Nate Geraci, head of the investment company ETF Store, stated that U.S. Bitcoin-based spot crypto funds have accumulated over 900,000 BTC. According to him, the size of assets under management of exchange-traded products has almost reached $60 billion. Geraci notes that spot Bitcoin ETFs collectively control 4.3% of the total supply of the first cryptocurrency. The net capital inflow into this asset class from outside the industry since its launch in January 2024 exceeded $17 billion, according to the entrepreneur. The head of the firm attached a video to a social media post on X, showing changes in spot Bitcoin ETFs over the past 7 months. In particular, the video demonstrates how BlackRock's crypto fund under the ticker IBIT surpassed Grayscale Investments' converted investment product in AUM. According to Soso Value Platform data, the gap between the two cryptocurrency ETFs continues to grow. As of July 19, 2024, IBIT manages assets worth $21.97 billion. Meanwhile, the funds under Grayscale's control amount to $18.29 billion. It is worth noting that the top 5 largest spot Bitcoin ETFs also include investment products from the following companies: Fidelity Investments, $12.14 billion. Bitwise Asset Management, $2.72 billion. VanEck, $779 million. Fourth news. Renowned analyst urges to get rid of Cardano, Ripple, and Worldcoin. Renowned analyst Rand Neuner has urged his followers to get rid of certain altcoins he labeled as bad tokens. Neuner is confident that the market will start a parabolic movement in the next 60 days, and these altcoins will significantly lag behind other coins. The list of underperformers includes Cardano, Ripple, and Worldcoin. Neuner speaks particularly harshly about Cardano. He believes that ADA does not provide long-term benefits, especially in the decentralized finance sector. He points to several issues, such as the complexity of using the platform and the low number of daily transactions. He also notes a decline in developer activity, which, in his opinion, reduces the network's significance compared to others. Moreover, ADA has lost about 85% of its value compared to its peak in 2021. I respect Charles Hoskinson, I like his team, everything is great. But I don't see any long-term application for Cardano, says Neuner. Neuner's expectations for Ripple are also low. He acknowledges that XRP has devoted fans but criticizes the unstable nature of XRP's market performance. Sharp spikes are followed by rapid declines. Worldcoin faced even harsher criticism, accused of manipulation and poor tokenomics. According to Token Unlock's data, more than 83% of the total supply is locked. Unlocks, starting on July 23, could trigger a significant increase in sales. Extremely low circulating supply, this token is ready for destruction due to unlocking, Neuner believes. Litecoin and Algorand also made it to his list of tokens to avoid. Additionally, Rand Neuner is skeptical about former market favorites such as IOTA, Axie Infinity, The Sandbox, VeChain, Quant, and EOS. Most of these altcoins have significantly lost value compared to their peaks in previous bull cycles.